It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Wednesday evening, November 4th, 2015, cranking our way through this first full week of the month of November. We get another busy newsletter in store for you guys and gals. Crude oil is bearish once again. I know, I told you. It's only been a handful of times this year we've been able to say bullish in back-to-back sessions. Definitely bears have the edge right now on crude oil. The black gold once again today after inventories report interrupted the measured correction off today's highs. We had that measured correction off the highs today, and the inventory report came out and snuffed that right out. Now we find ourselves with a measured move down, a bear channel down into a small trading range going into tomorrow's session. Our plan for the crude oil futures is going to be to fade the moves higher using buyer failures to sell around resistance levels overhead. We get a plan for you guys on crude tomorrow. How about the S&P? The S&P is bearish this evening with a measured move and bear channel down today. So our plan will be to look for the buyers to fail after a measured correction higher and some more selling opportunities tomorrow. We get a really interesting scenario here on the S&P right now, and it's going to be a little bit hectic if we go lower tomorrow without going higher, so make sure you stay tuned for the S&P. Gold is bearish and trading at the lows of a major bear channel, kind of a tricky bear channel on the gold tonight. Our plan is to stay patient for channel rotation back up to the highs of the channel, where we'll look for the next round of selling opportunities back down. And of course, how about the euro? The 6E is bearish this evening. Our plan is very similar to gold. Look for those counter trend traps as buyers try to take price up off these lows. We have a plan for crude, gold, euro, and of course the E-mini S&P 500 for you guys and gals tomorrow, Thursday's session. Before we jump in today's charts though, please remember to watch this video on our trading blog here at sidewaysmarkets.com. If you're watching this video on our YouTube channel, there's a link in the description of the YouTube video. Follow that link over to our trading blog for the following reasons. Upper left-hand corner, if you're not a member here at School of Trade and you'd like to get a free pass to come out and test drive our live trade room, I'd love to welcome you in as a guest for a day or two, either this week or next. Grab your free pass in the upper left-hand corner. In the lower left-hand corner, right above my ugly mug, you'll see a spot to register for our nightly newsletter mailing list. All I need is your name, a real email address, and then check your inbox. I'm going to send you a verification email to make sure you give me approval to keep sending you emails in the future. Right below the video tonight, you'll see a spot to download all the charts you'll see me using in tonight's video. Now you'll have a chance to grab all the same charts I'll be using today in the video, have those on your computer for tomorrow. And of course, on the right-hand side, more information about registering for our trial membership, membership information, member reviews, and don't forget, we always have someone standing by 24/7, 365 to answer all your questions. Guys, if you have any questions about anything we cover here in the newsletter or anything about being a member here at School of Trade, there's no question too big or too small. Use that live support button on the right-hand margin. I think we're ready to go. Now you know the who, what, where, when, and why. Let's jump right into tonight's newsletter, and we'll start out here with the black gold, the crude oil futures. Crude oil bearish once again after today's inventory report interrupted that measured correction off today's highs, or off yesterday's highs, and we find ourselves now with a measured move down, a bear channel down into this cute little trading range going into tomorrow's session. Now our plan will be to fade the moves higher using buyer failures to sell around resistance levels above. Now, if you remember this from last night's newsletter, we were talking about a measured correction off the highs, and we were looking for those sellers to fail here to buy this thing back up, and as you can see, it just collapsed right back down. This was a great example of how you just simply can't blindly buy after a measured correction. Measured correction back down off yesterday's highs. We're looking for sellers to fail, but interrupted by the inventory report today. And then once we saw them fail, we knew this thing was destined to keep collapsing. Became a very strong bearish rotational trending day, which we talked about in our trade with our members. So here we are. We have ourselves with a very, very easy to see bear channel down. Went a little bit too deep into the cookie jar there by the sellers. You can see here a couple overshoots at that low. The way it just fell out of bed today, it definitely didn't surprise me that we're seeing a couple overshoots of that low here right now. On top of that, we have an overshoot of a measured move, and then of course we have this trading range with a bearish bias. Now, one thing to keep in mind here is you'll notice we have the previous low of day. This is yesterday's low at 45.96, and we have yesterday's high at 48.36. So in all reality, this is just one big inside day, right? If you looked at this on a daily chart right now, it would look very similar to just one big red candlestick, right? Closing all the way down at its lows. So with that said, we're going to expect some profit taking after such a big down day. And after that profit taking, we're going to look to call the buyer's bluff by looking to fade those moves higher, right? That's going to be the most reliable trading opportunities in this bearish trend. Don't forget, we can't predict tomorrow. All we can do is identify where the most reliable opportunities, and that means following the trend, catching traders on the wrong side of the market, and being disciplined to follow that plan. So here's the plan for tomorrow. We know we have that bearish trend, so we're definitely staying short, right? Definitely staying short until proven otherwise. We have this measured move down into a trading range, so we're expecting a measured correction higher, very similar to what we talked about last night in the newsletter, except in the opposite direction. That measured correction higher, we're going to be looking for opportunities now as it goes higher to wait for buyers to try to buy that pullback so we can sell it back down. Now, if they're successful at buying that pullback, we'll wait for it to go a little bit higher and we'll do it again, right? So as high as it goes here, we're looking for those buyers to fail so we can sell it back down. Now, if you want to be a buyer right now, where would the best place to be a buyer right now be? Well, remember, if you're going to be a buyer, it's going to be counter trend. So the best way to be a buyer right now would be pretty much the exact opposite. Wait for price to hit these resistance areas and then buy into the seller's stop losses, right? You assume that there are going to be some sellers here, some impatient sellers that may not be able to wait patiently for price to come all the way back up off these lows. So find some impatient sellers, wait for them to fail, and of course that will give you the best opportunity to be a buyer counter trend. Obviously, the most reliable trades are going to be to the sell side right now. And as we go up, I'm keeping an eye on the resistance areas that we have labeled overhead. You can see them all marked up on the right-hand side. So as price goes up, we're looking for buyers to try to buy those pullbacks, failing into a selling opportunity, right back down. And then the ultimate target for tomorrow will be to bring it back down to that 45.96. And then if we do go lower from there, we'll be using big round numbers, 45.56, 45.48. These are going to be some easy targets, some previous day lows, right, as we go down. Most important thing right now, though, is that we need to wait for buyer failure. On a day like today, the last thing I want to do is sell that breakdown. If it does break to the downside, it's fine by me. I'm going to still wait for price to try to go up and then sell right into those buyer failures. I just don't want to sell at the low. I want to sell up off that low, and I'll use buyer failure to get into the most reliable trades. Don't forget, Trade Room opens up tomorrow morning at 8 a.m. Eastern Time with all of our members here at School of Trade. We'll be trading the crude oil futures in real time. Look forward to seeing you there with us. How about the S&P? Now, the S&P is probably going to be the most challenging market of the day tomorrow. S&P is bearish this evening with a measured move and bear channel down today. So our plan will be to look for buyers to fail after a measured correction higher. Very similar to what the plan on crude oil is. Here's the rub. The long-term trend is bullish, which means today may be nothing more than profit taking off of yesterday's highs. Remember, we've had the last 2 days of straight up, right? Well, this is that profit taking we anticipated off those highs, which is why we'll be looking for buyer failures to sell short tomorrow, no matter which direction we go. So here's the plan for tomorrow. We're going to wait for the break higher, look for buyer failures to sell this back down. Okay, sticking to the trend right now, sticking to the short-term trend. Right now, the bears definitely have control in the short term. But we know this is coming out of the last 2 days of very strong bullishness. And so if you looked at this on a little bit larger picture time frame here, right, really push it out here now it looks a whole lot different, right? Now we can see 1 day, 2 days, expected profit taking. Now, with that said, this is where we start to put together our plan for tomorrow. As price goes up, I'm looking for buyers to fail, to sell it back down, and we'll be looking for a target at the previous low of day. I don't think we're going to make it all the way back down to 2065 area tomorrow, but that will be an ultimate target, right, in the medium term here on the S&P. So remember, 2 solid days up. This is definitely a profit-taking, a well-deserved profit-taking session here from those buyers. This is where we need to stay patient tomorrow. My plan for tomorrow, again, get this thing readjusted here once again. There we go. Looking better now. Plan for tomorrow, wait for the break higher. I definitely do not want to sell this right now, because if this is going to be nothing more than a bull flag, right? Bullish move up, flagging right on down. If I want to be a buyer, the only way to be a buyer on this right now is to wait for price to take off the downside and then, right, seller failure to buy, or right? So that's going to be the first plan. If it does take off the downside, it's going to be bear trap at the low to buy this thing right back up. I'll tell you, a lot of me thinks that's what's going to happen tomorrow. A run lower, test that previous low of day, right? A little shake and bake at the low, and then whoop, right back up with this, again, being a long-term, right, bull flag, right? So we've got that 1-2 days up. Here's that profit-taking day right now, right? There's that profit-taking session that we saw today. In all reality, though, all we really have is just one big inside day. And so with that said, my plan will be, with price going higher, I'm looking for buyers to try and fail, to sell it down to that previous low of day. Here's where it gets tough, though. If they don't fail right here, right? If the buyers are actually successful, I'm willing to sacrifice that buying opportunity to see the bulls gain confidence and take it on the next one. So I'm going to be a little bit more patient on that buy right now, just because the bears definitely have the edge at this time. But at the same time, though, again, this is in a very bullish environment right now in the S&P. So again, buyer failure back down to that prior low of day. And then this is where I see the real shenanigans coming in. We test that previous low of day. Sellers try to keep it going lower, and a buying opportunity right back up. A little bit of an okie doke, right, out of this S&P tomorrow. Again, we're seeing it as a short-term bearish trend inside of a bullish long-term trend right now, which means as this price goes up, I'm looking for buyers to fail, to sell it back down. If they don't fail, again, this is where we'll now know that they're going to make a run back to that prior high of day, and I'll look to get in on the next pullback. Really the hardest part, though, is going to be if we go lower tomorrow. If we go lower tomorrow without correcting higher, this is a bearish bias trading range, and we have that previous low of day right now. So if you think of it as a bull flag right now, the last thing you want to do is sell that move lower. Wait for those sellers to fail and buy that sucker right back up. If it happens to collapse, well, then at least you played it safely tomorrow. But as of right now, though, we know price goes up, buyer failure to sell it back down, price goes down, right? Seller failure, right, to buy it back up. That's the best plan we've got for tomorrow here in the S&P. It will be very interesting to see what happens on this market tomorrow, mixing in this bearish down day inside 2 bull days. And again, now you guys on a plan there for the S&P 500. Next up here, moving from the S&P to the gold. Gold is bearish and trading at the lows of a major bear channel. So our plan is to stay patient for channel rotation back up to the highs of the channel, where we'll look for the next round of selling opportunities. We will look for a measured correction back up to the highs of a channel, possibly all the way up to that bull trap we saw, also the previous low of day around that 1113 up to the 1116 area for the best selling opportunities to go right on down with this long-term trend. So a couple things from this chart. As you can see, we get that major multi-tiered bear channel. And you know me, looking for channel rotation. Looking for channel rotation to try to sell around the high of that channel. Along with that comes our prior low of day. That'll be a nice testable area there before we head back lower. And I'm looking for a measured correction back into channel high, back into the previous low of day, back into that bull trap high, right? That should be a very reliable area to be looking for the sell. Now remember, when we make that measured correction, your first opportunity to sell it is going to be buyers try to buy the pullback. They place their stops right below the swing, and you know where we go next, right? That's going to be your first opportunity here to buy either on buyer failure or to buy on a reversal pattern. Okay, if you don't take those, or if we don't get a clear signal, then we'll look for selling retracements with wave patterns to finish off that channel rotation, right? The name of the game right now on gold is channel rotation. We want to stay patient, look for selling opportunities with buyer failures, reversal opportunities, and of course, continuations once we finally get those buyers to give up during that correction. Stay patient here on the gold, and if you're going to be a buyer right now, be very, very careful on the way higher. If you're going to be a buyer, you want to do so on seller failure. You've got channel midline as resistance, you've got prior low of day as resistance, and you've got channel high as resistance. Those will make for some excellent targets. Just be very careful right now trying to be a buyer on gold right now. You're going well against that trend. It's been very, very strong. And then last but not least, a market that looks very similar to crude oil. Here we have the euro. Euro bearish this evening, so our plan will be to look for counter trend traps as buyers try to take price up off these lows. We have plenty of resistance areas overhead, and we're going to wait patiently for these prices to test these resistance areas, followed by failures from the buyers for the best selling opportunities into tomorrow's session. Looking at this euro chart right now, we can see a couple real big important clues here. First of all, we have a definite bear channel all the way down showing sellers are in complete control. We have 1, 2, 3 measured moves down, a very symmetrical market. You know, we always look for at these measured moves. Now we're looking for a measured correction. A, B, C, D, up off the lows, into buyers trying to buy that pullback, right, into failures so we can sell it right back down. Measured moves down, we'll look for that measured correction back higher. We've got a nice little cluster of prior levels here, right? Just, what was that here? 0907, 0908, 0904. So you can see this whole area is a very, very attractive area for those buyers to take a measured correction back up, and then, of course, waiting for those buyers to fail to sell it right back down. Remember, there are 3 opportunities to sell after we get up off these lows. The first one is going to be off a reversal pattern. The second one is going to be a buyer failure. What's the third one? The third one will be stay patient, wait for those lower lows and lower highs, and just keep selling those rips as we make our move back down. And of course, we have targets waiting for us back inside this trading range. So up, back down, and then of course, targets waiting for you to the downside. We've got our eyes on these resistance areas overhead tomorrow on the euro. The hardest part right now is going to be waiting patiently. Waiting for a bullish measured correction into buyer failures, reversal patterns, and of course continuation patterns to follow this trend lower. Look for a retest of that 0910, 0900 area on the euro. On the gold, very similar scenario on gold. In this example though, we're looking for channel rotation back up to that 13.6 to 16.6 area, and then selling that sucker back down tomorrow, again, with reversal patterns, buyer failure patterns, and continuation patterns. The S&P definitely looking to be the most challenging of the session tomorrow. Again, scenario 1, price goes up, Buyers try to buy the pullback. It fails. We sell it back down, targeting that previous low of day. If it holds the pullback, then we know they're going to be gunning back for that prior high of day. We'll make sure we don't buy into major resistance and then buying those pullbacks on the way up. If price drops to the lows, we simply cannot sell that low. We need to wait. Sellers fail, buy it back up because of that long-term bear trend or long-term bull trend we have right now. And of course, if they are successful at selling that low, then of course we'll know more information as we gun for that prior low from Monday's low of day, and then wrap it up here on the crude, right? We know, again, very similar here on crude. Measured correction up off this low, measured correction up off this low. I'm looking for a reversal pattern, a buyer failure pattern, or sell those rips on the way back down here for the black gold tomorrow. Guys and gals, as you can see, we got a plan for you guys tomorrow. I look forward to seeing each and every one of you inside my trade room tomorrow morning. We open up at 8 a.m. Eastern time. If you got some free time tonight, grab a look at our free trial. We have the best free trial in the business here at School of Trade. You're going to learn more with me in 1 week on my trial than you will anywhere else on the interwebs. I can guarantee you that. And of course, we have a place for every type of trader here at School of Trade. We have beginner, intermediate, and advanced levels of membership, and we always have someone standing by 24/7, 365 to answer all your questions. Guys, don't forget, no question too big or too small. Keep in touch. We want to make sure we help you guys do this the right way. And of course, before we wrap up, remember, being a successful trader is like being successful at anything else in this life. It's like opening up a combination lock. It's not enough to have the numbers. You've got to have the sequence of using those numbers, and that's exactly what we do here at School of Trade at our beginner, intermediate, and advanced levels of membership. Guys and gals, don't forget, give me some feedback at jj@schooloftrade.com. Would love to hear from you. Also, don't forget to share this with a friend. Give me a thumbs up, thumbs down on the YouTube video. Always love your feedback. And come out and see us tomorrow morning at 8 a.m. Eastern time when we open up our trade with our members here at School of Trade. If not, I'll see you same time, same place tomorrow evening, Monday through Thursday evening at 8 p.m. Eastern time. We do our nightly newsletter. I'm out of here for now. Hope you're enjoying the week. Thanks so much for being here. Now rest up. We'll see you guys tomorrow for a Thursday edition of our live trade room. Be well out there. Be nice to each other. And I'll see you in the morning. Adios, amigos. Bye-bye for now.